Hello, Fred. Thank you for being here today. Could you tell us about yourself and your career?
Yeah, I'm a mining engineer. Went to the Colorado School of Mines here in Colorado and followed my father's footsteps in that regard. I'm a third generation miner. Started my career on the consulting side of the industry, but quickly changed over to the hard rock part of the industry. I've worked in South America, the Western United States, and obviously now with Vista Gold in a corporate capacity. Throughout my career, I've had the opportunity to manage operations, build one gold mine, shut another one down, and be involved in the turnaround story of both gold, copper, and industrial minerals projects. So considerable amount of operations experience and thoroughly enjoy what I do. This is a fun industry to be in.
What would you say separates Vista Gold from other gold developers?
Well, I think there's a couple of things, Jasper. One is the sheer size of the project that we have. You know, the Mount Todd project has over 10 million ounces of resource. Total resource, 9.1 of that's measured and indicated. We're located in a great jurisdiction in the Northern Territory of Australia. We have a project that's very well advanced, feasibility study completed, and I know we're going to talk more about that, but it's permitted, and we're working on some modifications to convert the permits for a 50,000 ton per day operation down to the size that we're now contemplating at 15,000 tons per day. We enjoy great support from the local government and the territory government. And we have an outstanding relationship with the Aboriginal people. And so, you know, I think that when one looks at, you know, what kind of company they should or might invest in, I think that we tick all the boxes, and then add into that the phenomenal gold price we have. Project economics are exceptional.
Excellent. So what's the current financial position?
Yeah, we finished the second quarter with $13.2 million. During the quarter, we received a tax refund from the sale of a project in Mexico in 2020. That was long overdue. But the bottom line is that we'll finish Q3 with more cash than we had at the end of Q2. So we're in a very solid cash position, and our quarterly cash burn is about $1.5 million a quarter, a little bit more depending on studies and things like that.
Yeah, you're fully financed until the end of next year at least.
Oh, easily.
So the feasibility study, it was released this summer, the updated feasibility study for the smaller scale and the more capital efficient version of Mount Todd. You already did a feasibility study in 2024 that envisioned a larger mine, higher capex. Could you remind us, why did you choose to update the feasibility study?
Yeah, that's a great question. When we finished the updated feasibility study in 2024, a study that we took updated the cost from the 2022 feasibility study, it became very apparent to us that our future, our destiny, was entirely in the hands of another company, that we were dependent on somebody else making a decision to joint venture the development of Mount Todd with us. And as we contemplated that, we felt that we needed to make some changes to the project that would allow us to control the future and the outcome. And one of the ways to do that was to significantly reduce the capex. And so we set out last December, we gained board approval to complete the feasibility study, but we set out to really accomplish three things. One was significantly reduce the capex. Two, prioritize grade over tons. And third, to rethink the project and to evaluate it as an Australian company would evaluate the project, and to design the project as an Australian company would design and build the project. And so it's really not, I'd like to point out, this isn't just a smaller scale of the Mount Todd project, but rather it's a complete re-envisionment of what the project can be and how it should be developed.
So what has been the response so far, both among investors and also among corporates?
The response has been extremely favorable. There's a lot of on the corporate side, a lot of feedback telling us that we've done exactly what we needed to do. We've taken it and made it so that it's something that would be easier to construct, easier to finance. On the investment shareholder side, obviously there's been tremendous favorable response. When we announced the results of the study on July 29th, our share price was 93 cents a share. Today we're at $1.60, and before the gold price started exhibiting a little bit of a correction, some weakness, our share price had been as high as $2.46. So, the response in the market has actually been quite positive, quite favorable, and very encouraging for what we're trying to do to advance the project.
What is the results of the feasibility study? What throughput do you have? Mine life, production, costs, NPV?
Absolutely. I love to talk about these numbers. We decreased the capital cost of the project from a little over $1 billion to $425 million US. So that's a 59% reduction in the initial capex. By raising the cutoff grade from 0.35 grams per ton to 0.5, we've been able to raise the reserve grade from 0.77 to 0.97 grams per ton. And in fact, over now the project, this smaller scale, has a life of 30 years. And quite honestly, we don't envision that it will operate at 15,000 tons a day for 30 years. We think it'll be expanded. But the first half of that 30-year mine life, the average grade of feed to the plant is 1.04 grams per ton. So we've accomplished a significant objective in getting the grade up. The economics of the study, we used a $2,500 gold price, which by today's gold price is quite conservative. And at that gold price, we have an NPV, after-tax NPV of $1.1 billion and an IRR of 27.8%. If we look at a $3,700 gold price, we have an after-tax NPV of $2.7 billion and an after-tax IRR of just over 52%. So the economics of the study are quite solid, and I think they're exceptional. The all-in sustaining cost life of mine is just under $1,500 an ounce. For the first 15 years, it's just under $1,450, and that compared to our Australian peers, all considering all gold producers, that all-in sustaining cost is right in the middle. I'd love to be able to say that we had lowest quartile costs, but we have a hard ore body. But we also have a very respectable all-in sustaining cost. So that's kind of a highlight. The reserve is 5.2 million ounces. The stripping ratio is 4.0. This is a very solid project.
Was stripping ratio 4.0?
It is 4.0, and part of that's because of by raising the cutoff grade from 0.35 to 0.5, we've got this block of ore that fits in that 0.35 to 0.5 gram per ton range. And we're actually going to segregate that in the waste rock dump. We've right now we estimate that there's about 71 million tons of that material, and that'll contain almost 1 million ounces of gold that will be set aside so that it could be processed at some future point in time. But shifting that material from ore to waste has the impact of affecting the stripping ratio. But it's not being thrown away or discarded. It's just being, if you could picture it, being stockpiled for a point in time in the future when it might make more sense to process that.
What's the free cash flow profile?
Yeah, that's an interesting number, because at the study price of $2,500, the project throws off almost $2.5 billion of free cash flow. At $3,300, that goes to 4.8, and at today's gold price of $4,000 an ounce, it's about $6.9 billion.
And how flexible is the mill designed to be expanded?
So we designed the project at 15,000 tons a day, and with the thought that it will be expanded. But there's two thoughts on this. One is, Artemis, for example, said we're going to build our project, and in year 3, I think it was, they're going to expand it by 50%. In year 7 or 8, they're going to expand it by another. They're going to double it. And then you've got companies like Capricorn Metals in Australia that said we're going to build a 120,000 ounce gold producer, and we will expand it after it's up and running and we see what the market's doing. We've adopted the latter approach, but what we've done is that we have allowed space around the plant in our general arrangement drawings for an expansion of the plant. There's additional room for a whole nother train of crushing equipment. The grinding circuit has ample room for the additional grinding equipment, and the same with the leach circuit for the leach tanks. And so we've allowed the space for an expansion to take place. We just haven't designed those specific facilities at this point in time.
And how confident are you in the cost estimates?
I am very confident in our cost estimates, and the reason that I am is that this feasibility study, we went to a new group of consultants. We brought in a group called GR Engineering Services, based out of Perth, as our process engineers, Mining Plus to do the mining work. We've obtained a quote from one of the top 3 contract miners in Australia. There's been some really fundamental changes. One of the advantages of having GR Engineering Services involved as our process engineers is that their bread and butter is not doing studies. It's actually they're an engineering procurement construction firm, an EPC firm, and they, over the last 4 or 5 years, they've built a half a dozen gold mines. They have a really good handle on what it takes and what it costs to build mines. And all the projects that they've built, they've delivered on time and on schedule. And so we wanted to take advantage of their reputation and their experience in the actual costs of what it takes to build an operation. Different than here in North America, we like to own and operate our own mining fleets. Australia has a very competitive contract mining industry. And getting the contract mining quote that we have gives me a great deal of confidence in what the mining costs are going to be. They've taken our mine plans and broken it down, and it's not quite tender level, but it's a very good estimate. And so between taking these two approaches with regards to getting numbers from people who have considerable experience, and using real world numbers, not just building costs up based on material quantities, I feel very, very confident in our cost numbers.
Good. And your average grade is 1.04 grams per ton for the first 15 years. Did the drilling program that you did last year impact the deposit and grade in a meaningful way?
Not really. I mean, quite honestly, it added ounces. And the drilling that took place in 2020, 21, 22, and 24 were all incorporated in the new resource model, and that's driven the increase in total resource from 9.4 million ounces to 10.6. But the grade changes have really come about as a result of changes in the cutoff grade.
So could you summarize the flow sheet and how if there are any changes from last year's feasibility study?
There's the flow sheet is a very simple flow sheet. It's 3 stages of crushing, primary gyratory crusher, secondary cone crushers. Previous operations at Mount Todd had used the same type of equipment. We think maybe the previous equipment was a little bit undersized, but we've taken that into consideration. The 3rd stage of crushing is HPGR crushers, which are quite widely used. We've done an extensive amount of test work, and so we're very confident in the crushing circuit. The one small change is that previously we had 2 stages of ore sorting. Our analysis with GRES of the gold balance through the sorting circuit has suggested that the laser sorting circuit at this smaller scale does not generate revenue, doesn't pay for itself, and so we've eliminated that. But we've retained the primary stage of ore sorting, the XRT circuit. Quite honestly, given where the gold price is today, in final design, we may decide to take ore sorting out altogether. But from there, we go to 2 stages of grinding. The first stage being ball mills for the coarse fraction, and then the fine fraction being mezzo verti mills to produce a product size, a 80% passing particle size of 40 microns. And that goes to a conventional CIL, carbon in leach recovery circuit, where we recover leach the gold, recover it onto carbon, and then it goes to an ADR circuit. And that's all of this is very conventional, typical gold recovery circuit. There's nothing extraordinary or sophisticated or complicated about our circuit. It's a very straightforward gold recovery circuit.
What are the primary advantages with contract mining? Is it just that it's more cost effective, or that it's done better?
Yeah, so with contract mining, you're doing a couple of things. One is that you're shifting the initial capital expenditure from your balance sheet to the contract miners. So that's one of the ways that we were able to reduce some of the initial capex, was by transferring that cost to the contract miner. Now the opposite side of that is that our operating costs go up because they end up having to recover that cost. But some of the advantages outside of the initial capex is that we're able to better manage project risk. We're taking all of the operating and staffing and maintenance risk associated with the mining operation and putting it on the contractor, who does this all the time. And so they assume that responsibility. For us, it means that, the contract, when it's executed, will have certain guarantees for amount of material moved and tons delivered to the plant. And that's an advantage to us, in that we get that guarantee without the management hassles of trying to make sure that we've got people showing up for work every day, that we've got mechanics that are qualified to maintain the equipment. There's just some really great de-risking advantages to us. And given the fact that in Australia, the contract mining industry is so well developed and it's so competitive, it's more the norm than the exception. In North America, it's an exception to have a contractor. In Australia, it's more the rule. And so it certainly gives us some very distinct advantage and puts us more in step, more in line with the way other mines are operated and developed in Australia.
You essentially have a negative closure cost as you're reprocessing some old heap leach material from previous operations. Could you add some color to that?
Yeah, so we've got a heap leach that's left over from the operations of the project in the 1990s. It has about 232,000 ounces of gold left in it. That's crushed to about 1/4 of an inch before it was stacked. And we've not included that in our mine schedule. And what we plan to do is to process that material, to run it through the grinding circuit at the end of the life of the project, and recover that gold. And the amount of gold, the recoverable gold that's left in the heap, is more than enough to pay for the reclamation costs, and actually to generate a small profit during the closure and reclamation phase of the project. So we've kind of left that toward the end of the project, and we consider that to be self-funding reclamation. And so that's the whole gist of what's going on there. There's about 13 million tons that'll go through the mill in the last 2 years, say, of the project, while all of the other facilities and installations are being closed. We'll be cleaning up the heap leach pad, putting that material in a tailing storage facility, while we complete waste rock reclamation and ultimately dismantle the crushing circuit and begin cleaning up many parts of the operation. It's a really simple novel approach to mine closure.
Excellent. And so, how long is the construction period and also the ramp-up period?
So that's another big change that comes with building a smaller project. Previously we had estimated a year for detailed engineering design, 24 months for construction, 6 months for initial ramp up. We're now contemplating, and this is the estimate by GRES, that because the size is a very common size, and they know exactly what needs to be done, that from the start of detailed engineering through first gold pour is now estimated to be 27 months. So we've been able to cut a little bit more than a year off of the schedule by going to a smaller project.
Excellent. So Mount Todd is fully permitted for construction, but what minor permit amendments, are required to start construction?
Yeah, we have the permits for a 50,000 ton per day operation as it was designed as the project was designed in the year 2020. And obviously with the change in gold price, other work that we've done, drilling programs, there's been some changes. We've extended the pit to the northeast along the south cross lode. It's gotten a little bit bigger in some areas because of changes in pit wall designs. And so we're in the process right now of modifying those existing permits to bring them in line with current designs. We've already filed for the AAPA authority certificate. We've the middle of this month, the middle of November, we will submit the what's called the EPA pre-referral, which will be the basis for the NT Environmental Protection Agency reviewing and assessing whether we need to do any additional work as part of modifying the EIS. And then by the end of January, we hope to have all of the documents in hand to be able to submit the conversion of our mining license, or actually the mining management plan, to a new license is called an environmental mining license. And we expect that once that's submitted, we'll be looking at a 6-month approval process. So we're on the path to have most of the permit modifications by the middle of next year. And there's a couple that'll take into the latter part of next year. But I'm very, very pleased with the progress that's being made, and there's a very clear path forward. And government is very anxious to see the project go forward, and we've been working very closely with them.
Great. So with the feasibility study out, what are the next steps?
Well, we just talked about a big one, right? Getting the modifications to the permits in place is obviously one priority, and it's probably one of our biggest priorities. We're going to start here in the next week or so a little bit of drilling to obtain core for some metallurgical test work that will give us some of the final parameters that we need for detailed engineering and design of the process plant. Early next year, we hope to just keep those drill rigs busy on a little bit of work to respond to a question that was raised with regards to geotechnical data on the west side of the pit, and get that issue resolved, again, leading up to a decision to undertake detailed engineering design. We've started a process to identify and recruit key personnel to increase our corporate capabilities in Australia. And I'm excited about what that means, getting a more capable and bigger team on the ground in Australia as we make the decision either to advance this on our own or to partner with somebody will be very important for us. And so that work has the initial part of that work has commenced as well.
When do you think you will be able to make that decision, if you partner or if you go on your own?
Well, certainly that's a decision that I would like to see made sooner rather than later, but I think that it'll be sometime in the first quarter of next year that we'll be in a position to say that, here's our options, and this is the best one for us, and we're going to move down this path.
And what type of companies would be interested in a JV or groups?
Well, certainly the JV partners are Australian gold producers, typically junior or smaller mid-tier producers. We are very attentive to and trying to be very selective with regards to their reputations and their capabilities to develop projects. We'd like the joint the JV to be accretive to both of us, something that would be recognized by the market and rewarded as something that's a big step forward for both us and our partner.
But if you would build it on your own, would you say that you have or will have the capability to carry out the construction?
Certainly, that's part of the effort that we're engaged in right now, is trying to identify key personnel that are recognized as being company builders and mine builders in Australia. And typically what we see in our industry is that you get these people on board, and then they come with their reputation. They have people that they've worked with in the past, and before long you have a core team of people to advance the project. Certainly, we're with having adopted contract mining and working with GRES, and certainly we'll go for tender, but I would welcome the opportunity to work with GRES as our builder, as our contractor to build the project. I know that they're very capable and qualified, and so that would be it's really getting the core management team that can supervise and lead these activities. As far as financing, we've started evaluating financing options. We've for over a year been talking to banks in Australia. We know that there's a government-sponsored fund that's called the Northern Australia Infrastructure Fund, or simply NAIF, and we've had conversations with them. We know that our project qualifies for financing, that they could be part of the group of lenders. We also have, it's well known that we have a relationship with Wheaton Precious Metals. And, that right now that's a royalty, but royalties are not their bread and butter. They're really a streaming company. And we feel quite confident that we could go to Wheaton and that they would give us a proposal for a package of streaming financing that could be part of the financing package as well. So there's a lot of options and a lot of movement on that front as we evaluate and begin making those early stage contacts and begin to work toward what ultimately may be the debt financing for developing the project on a standalone basis.
How small equity component do you think you could get away with if you would combine a stream and a stream and debt?
Yeah, ideally, I think we'd like to keep the debt around 60%. I know there's a lot of people that think at these gold prices that you could go 70% debt or maybe a little bit more. That's not quite our style. So, but just somewhere in the range of 35-40%, I would think would be the equity component.
Shouldn't it be less if you add a stream to that?
Oh, absolutely.
Okay, good. And what are the next steps from a technical perspective? What do you need to do with early works, detailed engineering, long lead items, etc.?
Yeah, so the long lead items are baked into the detailed engineering. That's work that'll be, in the first months of detailed engineering, long lead time orders will be placed. The work that leads up to that, as I mentioned, we've got drill rigs mobilizing next week to drill and generate the core for the metallurgical testing the first part of next year that will allow us to finalize the design of the regrind circuit. The Metso Vertimills will be able to appropriately size those, and that's important because they are the longest lead time item. And we'll be doing some work on just confirming thickener settling rates and just evaluating one last time optimal grind size and making sure that we understand what recoveries are. So there's that work. We talked about following that, the drilling for some geotechnical work that we want to do on the west side of the pit. There's an opportunity there to steepen the pit wall up a bit. That could result in the reduction of anywhere from 35 to 70 million tons of waste. or it could result in the pit going deeper and us being able to, over the life of the mine, recover another 300 to 500,000 ounces of gold. So that's a pretty low cost, high reward engineering study. But those two programs, we'd like to have them finished by the end of May, so that any point after that, we would be in a position to make a decision to award the engineering study and begin detailed engineering.
Perfect. And do your major shareholders have preference towards building or, putting it in a JV or trying to sell it?
At this stage, I don't think they do. I believe that it's all about risk management and it's about potential rewards. As in our conversations with shareholders, I think that they would be willing to accept either or if they could see that was the best, provided the lowest risk and best economic outcome for them. And that's something that we're very sensitive to.
Great. And where do you envision Vista Gold by the end of next year?
Well, that's a great question. If everything were to go just the way that we envision today, I think this time next year we'd be sitting here saying that we have all of the authorizations and modifications the approvals for those have been received, that we have favorably completed all of the technical studies that we just talked about, and that we have a team of people. And possibly even that we would have announced that we've started detailed engineering. But certainly if we could achieve permitting, the completion of the technical programs, and have a team in Australia that's capable of advancing and moving the project forward by this time next year, I think that would be a tremendous step forward.